Welcome back, everyone. I am Cass Piancey, and I'm joined as usual by my partner in crime, Mr. Bennett Tomlin. How are you today?
I'm doing pretty well, Cass. How are you?
I'm doing all right. I'm doing good. It's been an eventful day in the world of cryptocurrency. I feel like it always is an eventful day in the world of cryptocurrency. But today we have a special guest, Dirty Bubble Media. Actually, is your handle at Dirty Bubble Media? Is that what or is it Mike? It's the Mike Burr.
It's Mike Burgersberg. I made my account. I was reading Bloomberg and I was eating a burger.
So at Mike Burgersberg, we're going to do a nice show here at the beginning and the end. But yeah, you can follow him on Twitter. You'll see a lot of his stuff there and check out his Substack. But a lot of what you've been up to has been in regard to the Celsius network, which has been getting a lot of attention now, finally. I feel like you've been talking about it much longer than we have. We did an episode a while back just about lending platforms, and we did talk about Celsius. We talked about how their terms of service are weird, how the arbitrage seems weird, and that there's a lot of unexplainable stuff going on. So I guess what I'd like to hear from you is some stuff that we haven't gone over yet. First of all, for anyone that's unfamiliar, what exactly is the Celsius network?
So the Celsius network kind of builds itself as the unbank. Their motto is unbank yourself, which is, I think a little bit concerning to begin with. Essentially, what they offer are two products at least to consumers. They offer an earn product and a lend product. So the earn product is you deposit your crypto into their system. They do some things with it that they don't really disclose, and then they pay you a weekly return, which they actually call rewards. They don't call it a return because then they would be in trouble with the SEC. The other thing they do is they offer over-collateralized loans to consumers at very low interest rates. So they charge like a % interest rate if you over-collateralize a loan like 4-to-1 with Bitcoin or Ethereum. And you can also borrow against other cryptocurrencies, including their own token, which is called the CEL Token. And the CEL Token is kind of a centerpiece of how their whole system operates.
It's good you mentioned the CEL Token, because I feel like they make an effort to suggest, whether it's people who are on the platform or the company themselves, they make an effort to suggest that the CEL Token is not representative of the Celsius network and that it has really nothing to do with it at the end of the day. If it went to zero, who cares? But I think that's bullshit. Can I hear your take on that?
I agree with you, and I agree with you for a couple of reasons. First of all, if you can go all the way back, and I've done this, unfortunately, read the Celsius white paper. And in the white paper, they called the CEL token, literally they call it the backbone of Celsius network. Okay, they call it the backbone of Celsius network. It's worth repeating that. All right, so for a very long time, the system was originally designed to operate entirely around this token. And that's what people who originally bought into the system were buying. They were buying this idea that this token was going to be the centerpiece and the cornerstone and the backbone of the system. Over time, it has changed. Another part that's really critical to remember is that Celsius, the company, owns approximately half of all of the tokens. There's like 696, I think it's 693 million because they burned some, but 693 million tokens. The company themselves owns half, all right? They mark that to their balance sheet, mark to market, all right? So there's been good analysis done by a Twitter person who called himself Intelligicall, and I've really liked his work. And it showed that essentially their net equity back about a year and a half or 2 years ago was entirely based on the CEL token being marked to market. And in fact, there was a recent AMA where Alex was asked about how important CEL token was to the company. And he was talking about how when there was a recent deal, just to go back for people who are listening, Celsius raised $750 million from a number of investors, including Westcap and the CDPQ, which is the Montreal Pension Fund. When they raised that money, and Alex said, they bought into our company, they were buying CEL token. He says that flat out, right? Like a key part of this company's value is their token, or at least was. The token has crashed now over 90%. But at one time, that was a key part of their balance sheet. All right, so they're raising money with CEL token in the real markets, number one. Number two, they sold their customers on a concept that the CEL token was going to be a critical part of their business infrastructure. So, they've changed the narrative now, but to go back to what they originally sold people on, completely different story.
So Celsius Networks bills itself as a lending platform, that what they're supposed to be doing is taking your crypto, lending it out to institutional partners and OTC desks and the like so that they can use it for short-term operations and stuff. But it often seems to me that that is not necessarily where the majority of Celsius's yield is coming from. Can you talk about some of the places that Celsius has gone in DeFi or elsewhere to earn their yield?
Yeah, so a few places that I know of, and there are some places that I can't follow the money beyond a certain point. So I use the blockchain really heavily to kind of inform my research about the company, which I think is fair because that's kind of the whole cornerstone of the crypto concept is everything should be on the blockchain and visible to the public, right? That's the idea. So I think on my last check, I every once in a while periodically will just like post all of the wallets I found in their various positions. It was around $3.8 billion worth of investments on the Ethereum chain. And I'm sure I'm not capturing everything. According to in-app data that I obtained from a user today, Celsius has or claims to have an AUM, total AUM of $11.2 billion worth of assets. Of those assets, they say that I think 7.6 or 7.8 billion of those are in quote unquote in Celsius accounts, whatever that means. All right. So of that, I think I found about 75%. So on the Ethereum chain, what are they doing with the assets that they borrowed? Most of their assets, the two largest categories are Bitcoin and then Ethereum. CEL Token used to be the third largest. It's now, I don't actually know where it is. It's quite low. USDC was one of the major ones as well. And then like Matic and a number of other, the kind of really popular cryptocurrencies. But Ethereum is one of their big ones. What they're doing with a lot of it, first of all, they send a lot of their Ether to the ETH2 contract. And I've tried to understand why this makes sense. I really don't understand why it makes sense. I wish they would maybe explain
can we just hold really quick there? Because I don't think we've ever talked about Ethereum moving to Ethereum 2 on this show. I would love for Bennett to take an opportunity to do that.
The Ethereum 2.0 beacon chain is already running and has been running and is paying staking rewards. And it's possible for you to start accruing those rewards if you lock your Ethereum into this special smart contract. And so with the presumption being that the earlier you do it, the more rewards you'll accrue. And so when it's possible for you to access those funds after Ethereum 2.0 goes live, it will have been worthwhile. The issue is to access any Ether that you move over there, you need Ethereum 2 to go live.
And the idea being that they're putting in Ethereum that they have right now that they can trade with and use and do all these things, invest in whatever they want to right now. But the whole entire chain is trying to move over to this other form of rewards, I guess we'll call it. And like you said, it's a bit of a scheme. If you go earlier, you might get more, and but it ties up your funds for a longer period of time. So I just want to make sure everyone understands where we're coming from here and what this all means. So sorry, Mike, go ahead.
Oh, no, it's okay, because it's wrapping your head around that is a little bit confusing, just a little bit. So this is one of the things about what Celsius has done that's really kind of boggled my mind, and I still can't totally understand the rationale. Celsius claims by their own terms of agreement and how they report their quote-unquote rewards, which are really yield, they pay to customers, they pay it every single week. The issue is they've staked like, I think around 700,000 or more Ether, which is like 70% of the total Ether they claim to have under management, is in the ETH2 contract, either directly sent by them or indirectly through the Lido, which allows them to get this STETH derivative back. So the issue I have is, number one, all those rewards are locked up with the original Ethereum, right? So they claim to be paying these rewards out every week. Where's that coming from? That's an issue. Okay. Now, the second thing, what are they doing with the rest of it, right? So what they're doing with it is they're sending it to DeFi protocols. The biggest one is Aave, and then another one is Compound. And they're using the Ethereum as well as Wrap Bitcoin and a couple other assets as collateral, which they then borrow stablecoins against. All right. Now, what they do with the stablecoins is something I've tried to figure out for a long time. It kind of goes all over the place, and it gets very difficult to follow it. One thing I found recently that was a little bit concerning is that I do have contact with a number of current and former customers, so I'm able to get information about how some things operate inside the company. They were able to give me addresses that they had used to withdraw different assets from Celsius, from including USDC and Tether. And what I found was that a significant amount of the money that they had recently borrowed from these DeFi platforms, like something like 95 million or more, went to these withdrawal wallets and seems to have been paid out to customers. So it seems like at least some of what they're doing is using borrowed customer assets, all right, as collateral to borrow against and then pay out other customer withdrawals. Now, maybe I'm wrong. I don't know. The company's response to it was somewhat less than enlightening, in my opinion. So we really don't know exactly what they're doing. But I think it's a little bit concerning
to this claim, because essentially what just to put it into simplified terms for listeners, what you're describing sounds to me like a Ponzi scheme. So it's a big claim, and I understand you're trying to hedge that with exactly.
I'm not trying to make that claim.
It's not that claim.
I am never trying
to call them. In a sense, what you're saying is without being able to follow all of the funds and understanding what you do and in terms of following what you have been able to follow, some of it appears to be that way. If it is indeed that would, to me, sound very much like a Ponzi scheme, which is troubling. Now,
just a little. So the response this was interesting for me, right? Because I've been covering or writing about this or whatever you want to call it for a while. And I've talked to Alex Mashinsky a couple of times, the CEO of Celsius, in person via their AMAs. I think he knows who I am now. I don't think he likes me very much. But he's blocked me on Twitter for a long time, never responds to anything I posted. The post I'm talking about right now where I'm claiming that they're withdrawing and then or paying out withdrawals with borrowed money. He did respond to that. This is the first time he's ever responded. His response was essentially Celsius lends on DeFi when yields are high. They borrow on DeFi when yields are low. He said that they are earning income from these activities, and then said that I was making baseless accusations baseless allegations, and said that why don't you just ask a question and get a straight answer? Well, the thing is, the post that I made literally was, hey, this money was borrowed. It went to these wallets we know are withdrawal wallets. What's going on here? I literally just asked a question. So the lady doth protest too much, in my opinion. The way they often respond to these things is overly antagonistic and actually completely dodges the question that I was trying to ask.
Recently, it's been harder and harder for me to, with a straight face, describe Celsius as a lending platform because their activities seem to be so much more than just like taking the deposits and stuff. And like earlier today, I described them as you're giving your crypto to a hedge fund that promises to give you a certain amount of yield. And that seems supported by the fact that they're not just lending. And we saw that with their engagement with Badger Protocol or some of their engagement on Anchor Protocol or stuff like that. They're actively engaging in pretty high-risk activities across the ecosystem. And there's not really a question in here. It's just, it feels like Celsius has been getting increasingly brazen about they seem so far off what they're supposed to be doing. And like they're not even trying to hide that fact anymore. Yeah. Like they're talking about and this brings it back, what you're describing, what he said to you is they're forecasting future DeFi yields and trading based on that. They think that the yield is low enough that by borrowing now, they'll eventually be able to lend that back out. And that's an active trade. That's like a prop desk trade. That's not like just neutrally matching borrowers and lenders, or borrowers and
So here's another interesting example. Okay, so they also have a large position in the Maker DeFi protocol, which is essentially mostly collateralized with Wrapped Bitcoin, also I think Somatic as well. Now, if you go and look at the wallets are on my Twitter or whatever, if you go and you look, they borrowed, I can't remember how much DAI, it was a lot of the DAI stablecoin. They borrowed almost all of it over a period of about a month in October, November of 2021. They've never borrowed from that account since then, right? So they borrowed all this money. It looks like most of it got swapped into USDC and then it disappears. It's just, I haven't tried to follow because it's just too complicated. The point being, though, is that has been sitting there ever since then. They've been slowly paying it down, but very, very slowly. And instead what they've been doing is actually adding collateral to that position as the price of Bitcoin falls, right? And actually recently on May 12th, when the whole Luna thing happened and Bitcoin's price dropped, they came very close to getting liquidated. They were almost margin called on that. You can see it right on the there's different ways to look at the actual position and Maker, and they came within a point or something of getting margin called, and they had to emergency send a bunch of Wrapped Bitcoin over there to kind of shore that up. But yeah, they're making some really weird plays, and I've talked to a number of people in DeFi who basically the consensus always is that not only are they engaging in some very risky stuff, it's almost like they don't really know what they're doing. Like they often like put way too much money into different pools and like dilute the yield a bunch, and then they'll suddenly pull it back out. Or there's one called notional finance that they had put some wrapped Bitcoin into, and they like held on to these rewards for too long and basically missed the opportunity to cash them out and lost a bunch on that. There's just like a lot of weird things that I don't know what it is, but it doesn't really make a whole lot of sense. I agree with you on that.
If the person who claims to have invented voice over internet telephony suddenly decided to run a hedge fund with very few steps.
Well, almost like that.
Obviously, that was a good segue. So we have not really touched on. We've obviously mentioned Alexander Mashinsky. I don't like to make any of these podcasts personal, but I think it's an important.
Yeah.
We do have to talk about Alexander Mashinsky because he is the face of Celsius, and I'd like to hear his history. He has some really intense, bold claims. Is there any way to prove or disprove those claims?
There's a way to disprove some of them. Yeah. So Alex, I believe, comes from Ukraine, lived in Israel for a while, served in the Israeli Defense Forces. He claimed he was a pilot at one time. I have no clue if that's true or not. It's very possible it's true. And then came to the U.S. to kind of seek his fortune, I guess. Engaged in a number of different businesses until the mid-'90s when he got involved in basically building like telephone switches, and then got into the VoIP business, which is the voice over IP. Now, one of the claims that Alex has made on his own personal website, he makes it in interviews, I believe it was on his Twitter profile for a while, he claims that he was, quote, the inventor of VoIP, which is, absolutely false. There's no, go read any history of VoIP out there. He's never mentioned once, right? He points to some patents that he filed, I believe, in 96 or 97. And those patents are not really about VoIP at all. They're actually about building a marketplace to sell excess bandwidth, which is the business that his company Arbanet was actually engaging in. All right. So nothing about that claim is true. And actually so kind of a backstory for why I got interested in Celsius is actually because of Alex. I kind of learned about crypto, and, somebody coming from not a crypto background, I didn't recognize a lot of the things that were going on until I saw these companies saying they were paying out these crazy yields to consumers based on these magic things they were doing with the money. I recognized that because that's happened many times before in many other situations. And that's when I kind of got interested in crypto and really started doing research. And what I figured was that, there's BlockFi and there's Nexo and there's all these other companies doing basically the same thing or claiming to. The reason why I focused on Celsius was that Alex was different. He's not this 20-something nobody who pops out from thin air and suddenly runs a multi-billion-dollar company. He claims to have, $3 billion in exits under his belt. He's the inventor of VoIP. He's taken a company public. He has all these claims. And so I figured that if I was going to start anywhere, it was with a company that had this supposedly great background, right? If anybody is legitimate, it's probably the guy has all this 20 years of business experience or whatever, right? And so that's honestly, Alex is what really drew me into focusing on Celsius so much. But yeah, nothing really. Almost every story he tells about himself has some level of exaggeration at a minimum, all the way up to outright fabrications.
And could you talk a little bit in regards to his past about Celsius's CFO and Alex Mashinsky's involvement with with the schemes the CFO was arrested for?
Yeah. So Celsius is founded around 2018. Alex claims it was back of a napkin and he drew on and with the co-founder, who's S. David Leon, who's like a ghost. I've never really figured anything out about him, but a longtime business partner of Alex. And then around that time, Alex also gets involved with a few other crypto-related companies. Now, one of them is called Micro Money. That's kind of like a forgotten little ICO, initial coin offering that happened in mid-2018. That actually had almost an identical business model to Celsius. It's really interesting. It was going to be a crypto lending company. It has, if you go in back and you find its old website on Internet Archive, it's very similar pitch to Celsius. And it came out a little bit earlier. So I almost wonder sometimes if Alex got the idea from getting involved with this micro money thing, but I have no way to prove or disprove that. Anyway, Alex is mentioned as an advisor to this company on their old archived website. Also, if you go to Alex has a venture capital firm called Governing Dynamics, which I think is a reference to John Nash. He mentioned there's a number of different companies he's invested in that they have like this scrolling thing that shows, oh, we made this much money or we were involved in this big thing. And Micro Money is one of those. So he admits that he was an investor in it. We know he was an advisor to it. And the CEO of Micro Money was also an advisor to Celsius Network at the beginning. So there was a link there. Now, in addition to that, we were able to identify some of Alex Mashinsky's wallets using some pretty basic techniques. We can talk about that maybe a little bit later. And we found in this wallet that Alex had obtained pre-sale and then sold a bunch of the Micro Money tokens, which it was a rug pull. The thing crashed, and it looks like he sold right around the peak. All right, so that's one. Another one that he's involved in is this Moshe Hogeg situation. Moshe Hogeg is, again, it's interesting because Hogeg has this career that's almost eerily similar to Alex's. He founds a company in the early 2000s or 2010s that is kind of gets a lot of press but ends up being a failure, similar to Arbanet. Makes a name for himself that way, and then kind of goes from there into all these other schemes that he's operating through his own VC firm. There's some interesting characters that get involved there. There's this like Kazakhstan guy who's like tied to like the oligarchs from Kazakhstan who's like pumping money into this thing. It's weird. But anyway, yeah, Alex gets tied up with these guys too. And so Alex is an advisor to Siren Labs, which was one of Moshe Hogeg's projects. This project was going to build a blockchain-based iPhone or a smartphone platform. And eventually it ended up it was going to cost $10,000. And then basically the whole thing fell apart. They got sued by the company that was supposed to be providing all this support for this thing. And Hogeg ends up getting arrested. So that's one of the many projects that Moshe Hogeg is involved in. There's a lot of other things going on besides Siren Labs. But Alex was an advisor to that based on their website, based on his own statements. Right? Moshe Hogeg was an advisor to Celsius Network. In fact, Moshe Hogeg's name is in the original Celsius white paper. Okay, it's still there. And the wallet that we have for Alex Mashinsky, we know belongs to him, traded a significant number of the Siren Labs tokens right around the time of the ICO and likely made a couple $1 million from that. It also held about 5,000 tokens of a company called Stocks, which was another ICO that was run by Hogeg. So there's all those connections there. And then on top of that, Celsius, of course, ends up hiring Moshe Hogeg's former CFO as their CFO. And of course, he was the CFO for multiple of the companies that Moshe Hogeg got in trouble for. The CFO was subsequently arrested in Israel as part of the Moshe Hogeg case. I believe he's been released since then. I don't know if charges have been filed against him or not. And then the third connection that's also really interesting is that Celsius' chief revenue officer, which I don't know what a chief revenue officer actually does. I've never really heard of that before, but Celsius has one, is a guy named Mr. Pavan, who was formerly Moshe Hogeg's personal lawyer. So you have at least three different connections to this Moshe Hogeg person. And the part, honestly, this is when I really started getting involved in Celsius, is when I went on an AMA to ask Alex specifically about this relationship after the CFO was arrested. And his response was to pretend like he didn't know who Moshe Hogeg was. And I mean, we have the audio for that. So it's, he lied to me. And that was really when I really started going, there's something wrong here.
I think I might have live tweeted that AMA. Because it was it had just become public that like a couple of the states had filed the orders against them, and then their CFO got arrested, and they spent like the first 40 minutes of the AMA like talking about nothing, like their random merch updates and what his wife's company had been up to and all these things, and like it was ridiculous. It was ridiculous to watch. And I remember him trying to pretend like he had no idea who this person was. And I remember being like, I don't think that's true. There was connections at that point, and that's part of what really troubles me about Celsius is that Alex seems very comfortable bending and distorting the truth, and they've built up like a pretty passionate group of believers that seem to like think Alex and Celsius as a whole are going to change the world. And so because of that, the community around it ends up just so toxic.
Yes.
I guess I wonder what you think There's a lot of we might as well air out all of this dirty laundry right now that's going on around Celsius Network. I think a lot of people who are kind of well-known people to maybe not even well-known people, but they have a voice and they're coiners. They're not like us. And they seem to be joining forces with you in that they think Celsius is up to no good. And so I'm wondering what the broader expectation is of what happens in the case of a out-and-out failure of the Celsius network. I know, and this is strictly hypothetical. I'm not trying to FUD. I'm just asking a question.
Well, okay, so I'm going to start by saying, like, the involvement of certain Bitcoin promoting people in this has been kind of recent, I think. I think some of them were posting about it a while ago, but recently it's kind of gotten almost to a fever pitch. And I really don't understand what their motivations are. I've talked to a couple of them. I mean, they seem like they're sincere. I don't know. Personally, I don't own any crypto, never have, don't really plan to. So I don't have any financial interest in what happens here. Just want to put that out there. I don't really know. I don't know if there's some like financial gain that they're trying to get, or if they just really don't like Mashinsky. I think he's made a lot of enemies. If you ever listen to him talk in his AMAs or whatever else, he routinely insults like everybody in the business. I mean, the exchanges, other crypto lending platforms, custody services, whatever. He insults like everybody and talks about how much better their product is. So I think part of it's probably just personal, but I honestly don't know. In terms of speculating as to what might happen, I don't know. I kind of think it depends on how it happens. The thing that's concerning is that, I don't have much visibility into their institutional partnerships. We know that at one point they had borrowed at least 1 billion tethers from Tether, which also happens to be one of their largest shareholders. So we know that Tether is exposed to them. We don't know who else may be exposed to them in terms of the institutional side. But on the DeFi side, I mean, they're some of the largest participants in these protocols, right? Like Aave, I believe it's somewhere between 30 to 40% of the USDC debt is their debt, right? And they're also one of the largest depositors on that platform. So if they have to suddenly pull out a bunch of crypto, like the Anchor Terra thing, which if you guys want to talk about a second, we can, they are so big that anything they do has significant impacts on the whole ecosystem. They're just too big. That's part of the problem, I think, is that, maybe if they hadn't been so focused on growing so quickly and so large, if they had stayed small, maybe they could have made a go of it. But they're so big now that, it's a problem. I mean, like what would have happened, for example, what would have happened if they couldn't have, covered that maker deficit and they had gotten margin called on that? That's a lot of Bitcoin that's sitting there. And that's a lot of debt to the maker protocol that's sitting there. So I don't know enough about how these protocols operate to know, like, what would they do? Would they immediately start liquidating the position? I'm not sure, but if something like that happens, there's a serious problem. And one specific thing I would like to talk about is going back to the staked Ether thing. They hold a lot of this ST-ETH derivative of Ether that's based on this ETH2 contract. And they hold like 488,000 of them at least that are mostly staked in Aave, but that's I think like 10% of the market cap of that. And the peg actually broke in May 12th when the whole Luna Terra thing happened. And it hasn't fully recovered. I think it's trading at like 97 or 98 cents on the dollar right now. So, if they try to move that position, if there's for some reason they have to try to cash that out, or if they just spook like they did with Terra and decide, hey, it looks like this is going south, let's get out now, that would probably be enough to like totally crash the market for that derivative. So there are a lot of systemic risks that are definitely posed by this company's involvement in these different protocols.
They're supposed to be a lending platform. I know I keep coming back to this.
Yeah.
I know I keep coming back to this. But they're supposed to have people who want to lend their crypto, and they're supposed to find people who want to borrow crypto, and they're supposed to facilitate that relationship, and that's supposed to be the entire thing.
Well,
they're not supposed to be like operationally exposed to getting liquidated on MakerDAO because they're trying to get extra leverage by swapping their DAI to USDC. Like,
for sure, there's overextensions of realities here, but I do. Like, when I reflect on, for instance, a way for them to get that kind of yield that they're promising, I go to, okay, so let's say they borrow a bunch of stable coins, like with customer funds, like we're talking about, as a purely hypothetical. But if they borrowed all those stable coins, I would assume they could go to a place like Bitfinex, especially when markets are volatile and weird. And Bitfinex will pay a nice fat premium for you to lend out those stable coins on Bitfinex, right? Like, I don't think that's crazy to be a way for them to receive yield. Of course, it couldn't last for a year or something, but it seems like a temporary solution to that problem.
Yeah, that's what they're doing. I mean, that's what they have to be doing. Like, I went through and I did write an article where I tried to calculate roughly how much they had to be earning on those stable coins in order to make it work. And this was from a few months ago, but they're borrowing because these are over collateralized loans, right? So for every dollar of collateral Ethereum or Bitcoin they put into these protocols, they get back 30, 40, 50 cents worth of stable coins, which are then lent out. They're paying interest on the stable coins to the protocol. They're also paying interest to their customers who they got the Ethereum and Bitcoin from. So if you figure that out, they have to be earning I think it was 15 or 16% on these loans. And I mean, is it possible? I guess it's possible. The thing is, you can go to these DeFi protocols that Celsius is using and deposit your crypto and borrow for the same rates that they're borrowing for, like 2 or 3%. So why would you do that? Because Celsius always claimed that all of their loans that they make are collateralized, right? Either they're uncollateralized loans and people are paying higher rates, or they have some really dumb customers who just like paying Celsius way more money than they need to. There's no other alternative there.
I'm waiting for you to have a counter argument here, Bennett. So I was trying to just hold open some space for you there.
If you can, I've been spending every time I post something, I ask them to prove me wrong. Just tell me what I'm missing. If there's some genius play here, please just tell me. That's all I want to know. Just tell me how it works. That's all I want to know. And they've never been able to give me any kind of explanation beyond that.
But this is the classic. I mean, let's just be real. This is what what the stablecoin. This is what Tether says. This is what Bitfinex says. This is what anyone who doesn't want to expose their books to you says. They pull a KFC, right? They say it's 12 secret ingredients. It's if we give away these ingredients, then we lose our competitive advantage. And so, what's the counter to that claim? How do you counter that claim? I guess CoinDesk did. I guess CoinDesk did counter that claim and won, right?
or hopefully going to win.
Yeah.
So ever since the Terra collapse, I've been thinking about Madoff more often for reasons. I don't know why Madoff is on my mind after the Terra collapse, but it has been. And there was a Y Combinator company called Stable Gains that was advertising this unbelievable yield for people who deposited money with them because they were effectively just playing the anchor game and trying to pass that along. And when it collapsed, all of the customers for this company, Stable Gains, basically got screwed, or at least so far they seem like they're going to get screwed.
Well, they changed their terms of service.
Yeah, to pay them back in Terra instead of dollars, which is,
Yeah.
And so I'm reminded of some of the Madoff feeder funds. If you invested directly with Madoff when they went to claw back the funds, those people had precedence over the institutional funds and stuff, the feeder funds that people were investing in to try to get Madoff's yield. And every time I look at Celsius, I just get this feeling in my stomach that they are exposed to Ponzi-like structures throughout crypto, and that at some point the people investing with them are going to end up in a situation where, like the people who invested in Madoff's feeder funds, your recourse is limited.
Well, and let's be real. Anchor Terra, that was a Ponzi scheme. There's no ifs, ands, or buts about that one. Okay, that was obviously a fraud, and it was obviously unsustainable, and it was obviously going to collapse. Bennett did a very good job of explaining that. A bunch of other people did too, but I'll give you the credit.
And in
for
that
it.
case,
all right,
yeah,
everybody
in that
knew.
case, Celsius was able to make their exit. They were pretty on.
They made their exit. Good for them. But you know what? Why, in God's name, were these supposed professionals taking their customers' money and putting it into an obvious Ponzi scheme? What does that make your company if you're investing? They staked, I think it was like $500 million worth of Ether in Anchor, and they had at least $130 to $150 million worth of Terra UST. So there's $650 million, which is like, I don't know how much their AUM was at that point, but it's a significant chunk of their assets that they invested directly into a known, obvious Ponzi scam. They got out. Sure, they did. Good job.
But what about next time?
Come on. Why are you doing that?
Why?
Well, that's the point. There's only so many times you can do that.
There shouldn't be a lending platform gambling that they can exit Ponzi's in time. That is not like what should exist.
Yeah. It's unsettling. It really is. And that's, part of the reason I've spent so much time on this is that there are a lot of people who believed them and have, literally, a lot of people have already lost their life savings on the CEL token crashing and having borrowed against the CEL token and then been liquidated, which the company in many posts and in many AMAs basically said could never happen. Almost came very close to promising it's never going to happen. Okay. A lot of people lost their life savings. We're talking hundreds of thousands of dollars a piece. People who thought they were going to retire using Celsius, which on one hand, maybe you kind of deserve what you got for falling for that. But at the same time, these are normal people who, believed the story, which, if you don't look too deeply, can be a compelling story, maybe, And something else to talk about with feeder funds. Celsius has its own feeder funds, right? Voyager Digital, which is a Canadian crypto company, has an exchange and also does like a lend-earn product. They've, at least in the past, had a significant amount of money with Celsius. There's a German company called Nuri, which was previously basically what they do is they'd sell Bitcoin for gift cards, and that turned out to be money laundering, and they weren't able to do that business anymore. So they switched to being a Bitcoin bank, and literally their business model, at least the last time I checked, was sending all of their Bitcoin to Celsius with absolutely no recourse. Okay, so there's that one. There's a guy in, I think, Indiana or Ohio, I can't remember which one, who's this investment advisor who sells a number of different crypto-related things. He has a crypto coin fund, which includes CEL Token. He also has a fund where he sends money directly to Celsius. So there's a number of these other feeders going on besides under Celsius, and then Celsius itself is feeding into these other things that are on top of it. It's like Ponziception almost, Again, not saying that Celsius is a Ponzi scheme. All I'm saying is they're clearly investing in Ponzi schemes.
This is my final. I think this is my final question for you. Today we were hit with the news. It is Monday, June 6th today for anyone listening in the weeks it'll take for us to get this out. But today we are hit with the news that BNB, which is the token for Binance, is being scoped out by the SEC as a possible securities violation. Now, look, the response to this has been pretty resoundingly, yeah, we all knew this already, asshole, which, okay, I get it. Everybody chill. I still think it is newsworthy that the SEC is making a move against them or thinking about making a move against them. I know people like to pretend it isn't because the SEC is pathetic. But anyway, I'm wondering if there's a correlation here. If there's some sort of, sounds a bit like CEL Token, maybe. I don't know. I don't know what your thoughts are.
Well, I'm not an attorney.
Nor are we, by the way.
Finance expert. I'm just a guy, who got interested in this weird thing that was going on. So, my opinion is only what it's worth, not much. But I have read, the laws surrounding this. And, if you have to think about what CEL Token is, right? CEL Token, first of all, like I said before, the backbone of the company, right? It's the way they pay out yield. It's the core of their balance sheet. It's clearly being traded like a security. Everything about it screams to me security. Obviously, that hasn't been, decided yet or whatever by the SEC, but it certainly looks like one to me. It looks like one. It talks like one. It functions like one. The only difference between CEL as a security and regulated securities is that there are a number of interesting things that go on with CEL token that may not go on with regulated securities like wash trading and insider trading. But we may not talk about that today. It's almost certainly a security. And we already know that the SEC is investigating Celsius and Gemini, who have a number of business relationships with each other. We know that for a fact. We know that they stopped offering their earn product in the United States maybe like a month ago, all out of the blue. Nobody really knows why. I mean, I'm certain it's because of some regulatory stuff that's coming. And we know that BlockFi paid a $100 million fine and also ceased doing business in the U.S. It is part of a settlement with the SEC and CFTC. So I think the regulators are probably coming pretty soon. And I look forward to that. I think that'll be interesting to see what they have to say.
What were Gemini and Celsius doing together?
Well, it's interesting that you asked that. I had a post about that a while ago. So Gemini has their GUSD product. And I don't know this is why the Celsius investigation with the SEC, all I know is that the Bloomberg reported that there was an investigation that involved both Gemini and Celsius. So I don't know if it's linked to this. But I know at least one example of a relationship between the two of them is that Celsius, I think it's like their 10th largest asset is actually GUSD. GUSD has a market cap that's somewhere between 100 to 300 million dollars. It fluctuates quite a bit. But Celsius was controlling something like a third to a half of the market cap of this token for some time now. And I looked at the flows of that token and where do they go? And it's weird because all it does is cycle between Gemini to Celsius to BlockFi to Celsius to Gemini in a kind of this circle. And all three of them offer significant yields on GUSD. So my thing was always, I never understood.
This point out there, I think Gemini, and tell me if I'm wrong here, Bennett, but I think Gemini got in trouble because, and it was reported, I think, by The Block at the time, years ago, where they were offering yield. They were offering, like, incentives to anyone who was buying GUSD. So this is something that happened years ago. So if this is something that Celsius has been doing for a while, they were absolutely getting part of their yield from this behind closed doors, under the table deal with Gemini. Like that's believable.
Well, no, that did happen. They paid a rebate or a discount. They were giving away GUSD for less than $1 is what I think it was, which USDC did as well. Circle's giving out rebates to get people to use USDC
for
as well. So let's get them in there as well, just for fun. I think the more interesting implication is that GUSD is extraordinarily tiny, right? Like it doesn't matter in the scope of stablecoins.
Yeah. And nobody uses it.
A couple of days ago, the CFTC released an interesting document alleging that two unknown principals who happen to be massive Bitcoin whales of Gemini, I have no idea who that could be, ended up like lending out a bunch of their personal wealth to market makers and stuff to help maintain volume on Gemini and on Gemini products so that they would be competitive. My fear with what you're describing, with these funds mostly cycling between those, is that, and again, this is speculation, is that those same principles could be directly trying to incentivize adoption of GUSD by basically subsidizing the yield themselves, because I cannot, for the life of me, figure out why there would be a legitimate demand to borrow GUSD, because it's used nowhere. Like, no protocols, no real exchange adoption.
Yeah, all it's used for is swapping into other stable coins, as far as I can tell. That's the only thing anybody does with it.
And so that's very strange. Yeah. That's extraordinarily strange.
Yeah.
That's troubling.
So on that troubling note, anything else, Mike, that you would like to leave listeners with before we sign off?
I think, the only thing I'm going to say is that, I didn't know anything about crypto like a year ago. And I've learned a lot in this time. And I think that it's possible for anyone who has the interest and has a little bit of time to educate themselves. And that if you're going to invest in anything, you should probably take at least a few hours to do a little bit of research before you entrust them with your life savings. Please, please, please do that. Probably that message is too late for a lot of people, but, We'll see. Maybe somebody will listen.
And make sure to check out Mike at Mike Burgersberg on Twitter and Dirty Bubble Media on Substack, right? Excellent.
Yes.
Perfect. Yeah. So Bennett has asked me to try to figure out a way to get more likes and subscribers and reviews. So I came up with a pretty cool idea, and we're going to be basically for every like, subscribe, review you give us, we're going to give you ultimately in the end 4 to 5 likes, subscribes, and reviews in return. I can't explain the intricacies, the complexities of how we manage to get that return, but I can assure you it's going to happen one day. Not financial advice.